All right, y'all, in this session of the free course, we're going to be talking about managing open trades, and we're going to be dealing with trading psychology. We're going to be talking about things like leverage and mindset and more. So make sure to like the video, subscribe to the channel, because we are bringing you the most comprehensive free trading course here on YouTube. And we got to give a major shout out to our sponsor, Antarctic Exchange, the best trading experience in the world. This is a decentralized exchange made by traders for traders. And what sets this apart is, first of all, this is a decentralized exchange, meaning 100% self-custody of all your assets. You're not depositing your money into another company's wallet or platform. You're keeping everything self-custody in your own cold wallet or hot wallet. And because you're doing that, that means it will never ever require KYC or know your customer. The best part about Antarctic Exchange is ownership. All traders on Antarctic will get a portion of the trading fees that the exchange makes. And there's also an opportunity for you, the trader, to be the market maker and provide liquidity to the exchange. And in return, you will receive a proportionate amount of the market maker profits, including liquidation fees. Now, this has never been done before. Instead of your typical centralized exchange where everybody's trading against the market maker, and let's be honest, the market makers are the one who always win in the end. We are fellow traders trading against fellow traders, providing liquidity to each other, and it evens the playing field. Now, if you sign up in the link in the pinned comment and description, you will get the lowest fees, period, on any exchange right now that I know of. 0% limit order fees, 0.01% market order fees. This is a great deal on fees. It makes scalping on low time frames absolutely amazing because you can market in, market out, and make big profits on small moves. So make sure right now to go sign up to Antarctic Exchange. Links are in the pinned comment and description. I'll see you over there. If you're looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Boyan, man, in one live stream, dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. jasoncaspertrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. So, managing open trades. As you can see, I'm currently in 1, 2, 3, 4, 5 open Bitcoin trades at the same time. These are all trades I've taken this month. Setups given in the Casper crew. Even told people when I took this dang long trade. But the question is, how do you manage these open trades? I always get questions like, hey Jay, like, how do you hold your trades so long? Like, how do you know when to close? Well, I'm going to be walking through exactly my process and the mindset that I use in order to hold and manage multiple open trades at the same time. And it's really not overcomplicated. People like to make it more complicated than it really needs to be. But essentially, guys, when it comes to taking trades, the mindset that I have going in is, if I have a plan for a trade, for example, let's say I have a plan to take this short, which is a short I have taken, set up, given in advance in the Casper crew. And we know there's a potential for this to be a major top, right? There's always a potential, okay? However, when we are looking at this trade here, what I always do with all my trades is I hit a take profit 1 when it makes sense to hit a take profit 1. And in this instance here, from the original trade setup that was given in the Casper crew, my take profit 1 was going to be at 107,344. All right, 107,344 was my original TP1 idea, because that was a naked daily point of control where we got a little bit of a bounce. All right, so from right here, you can see I hit my take profit 1. And by the time I hit it, it was a very good risk to reward ratio. It was about an 8-to-1 for me by the time I took that take profit 1. And so what I did is I locked in a few $1,000s of profit. And then in my mind, guys, I consider this trade as good as closed. Why? Why do I consider this trade as good as closed? It is because when I have made more money than I have risked, over 3 times more money than I have risked on the trade, I consider that a win. So with my partial take profit, I made over 3 times more money than I initially risked, which means I have entered, executed, and exited a successful trade. I've made money on the trade. It's a guaranteed win because you can move your stop loss to the entry or even keep the stop loss above the high, which is a very small loss, not even cutting into your profits too much. You can say to yourself, I'm done with this trade. Now I move on to the next one. And then you basically keep this trade open. You keep it running. Why? Because the 2 options right now in this current trade that I'm in is option A. We dump down, we change market structure, the bull market's over, we go all the way down potentially to the low 70s, right? Trading this massive sideways range. That is a potential. I don't think that's going to happen. I think we're going to probably pump, but this is obviously a potential. So I keep a runner open because in case we dump down like this, I am in a short trade from the high, having already guaranteed 100% to make more money than I risked on the trade, a 3-to-1, a little bit more than a 3-to-1. And so in the worst case scenario for the short trade, I've made 3% on my account and I get stopped out at my entry or close to it. In the best case scenario now, I'm making close to 40% if this happens. 40% in one trade. Isn't that crazy? Now, that's not actually accurate because my original stop loss is a little bit higher than that. So I'm making more like potentially like 25, 30%. So my 2 options are I make 3%, great, on to the next trade, or I make 30%. Wow, amazing. And so if I have the mindset of after my TP1, and remember, you always want a TP1 where you've made more money than you initially risked, you forget about the trade. Don't worry about it anymore. Keep it open, and what you can do is you can set limit orders on the way down. So we know 97,000, very important level. Set a limit order here. We know 87,000, very important level. You can set a limit take profit here. We know taking the lows down here, coming to 73, very important. You can set limit orders here to take profits out if we get a big drop. And then you don't even have to worry about it. The only reason you should be looking at this trade is if you're a YouTuber and you know you get more views if you show open positions. Pro tip, all right, for y'all who want to be YouTubers. Other than that, you should not even think about the trade. Now, meanwhile, while this trade is running, okay, you can look for more trades in opposite directions or the same direction. Again, you totally forget about this. So you're still in the short trade, okay? But then at the same time, you could be looking for long trades. So for example, one of the setups we gave in the Casper crew, VIP Discord, was a long from the Golden Pocket 786 zone right here, okay? So while you're still in the short, having guaranteed a 3-to-1 risk reward ratio, you forget about it, right? Because it's easy to keep your bearish glasses on if you're in a short. But then if you get into a trade from down here, let's say, all right, now what you can do is you can say, all right, I'm going to take a partial profit here because this is major resistance. And you can do so, and depending on how much of the trade you take out, you could have a 2-to-1 locked in, where you lock in 2 times more profit than you initially risked. and then you can move your stop loss to your entry, and you can let the rest of this thing ride. So now you're in a position where your short trade has made money and is open, and your long trade has made money and is open, and now you can go to sleep on the weekend or go on vacation or whatever you want and not have to worry about what the Bitcoin price does or whatever asset you're trading. Because if, let's say, we get a crazy dump, your long trade gets stopped out in profit, mind you. Your long trade gets stopped out making more money than you initially risked on it, so it's a win. All right? It's a win. And your short trade is still open, making more and more money. Or if the price pumps, your short trade gets stopped out, having made more money than you initially risked, so it's a win, right? If this was a day trade, for example, and you made 3 times more money than you risked, you'd be like, man, that's a great trade for the day. So if you take a partial profit and you made 3 times more than you risked, you can say, wow, a great trade for the day, but I still get to keep the runner. Now I'm going to forget about the short. I'm going to enter this long because I see it's a good opportunity. Like, I made a plan for it. I see my confirmations. Now you're in a long trade, okay? Short and long at the same time. The only way you could lose out on this, all right, is if the price does this, whoop, whoop, shoot, right? Other than that, you're in a pretty good situation. Now, you forget about both of these trades. You forget about both of them. And then, like, let's say the long trade gets stopped out. Okay, not a big deal. You're still in the short. This long trade made money. And then you see another long trade. Maybe take the liquidity down here. You expect a little bit of a bounce, right? This time, you can get in the long trade. Maybe you're not expecting as much from this trade because we broke market structure. Maybe you close the full trade up here, or maybe you take a partial. Whatever the case, my point is, when you take a trade, after you lock in that partial profit, forget that that trade is open and continue to look for other trades. Now, what I'm showing you here, mostly works for what I would consider like swing-ish trades, right? Swing-ish trades. If you are scalping or day trading, it can be more beneficial for you to come in here and say, okay, I'm just looking to make my money for the day and then look for a trade tomorrow. So in that case, you might just close the full trade here, make a 4-to-1 and call it a day. Or you might just close this trade here, in this case, make about an 8-to-1 and call it a trade for the day. This is perfectly acceptable as well. This is what a lot of people do. The reason why I prefer the other is because the psychological benefits of being in a position, for me, prevent over trading and FOMO trading. If I wake up tomorrow and we're down here, if I had closed out this short, the psychological effect it would have on me would be powerful. I would feel, why did I close the trade? Now, I know this is not the right thing to think, okay? Keep in mind, knowing and doing are 2 separate things. When it comes to trading, you know what you're supposed to do. It's very difficult to do it. And so, even though I know it's wrong to feel like, if only I had kept this short trade open. Man, we are dumping. Let me try and look for another short. Even though I know it's wrong to think that, I'm still going to think that thought. Now, I will fight the thought, and I will utilize my discipline to not short the bottom, but it still sucks, right? If I have this runner open, it totally removes that psychological pressure that honestly messes with my analysis and my decision making. So you have to figure out how your brain works and what's going to be best for you as a trader, all right? The only reason I hold positions so long is because of what I've just told you. You take the partial, let the rest ride, all right? Lock it in and let it ride, they say. Good old they. What a great guy. But yeah, so you have to figure out what kind of trader you are when it comes to holding positions. And then the next thing you know, if you're doing it this way, where you hold the runner, Maybe you're in 5, 6 positions at once for the same pair, which on Antarctic you can do using the split position mode. And then it really doesn't matter what happens. It creates such a relaxed environment for trading. Because let's say, we are trading a range, like a sideways range like we are now. And, we're in the middle of the range. We come back here, let's say, and then we come down. Now you're in a long trade from here. You're literally long from the bottom, short from the top. And you're looking for trades, so you might take another short, let's say from here, and then we dump, right? It creates such a relaxed environment for trading because there's no pressure that you're going to miss the move. And even if you're taking losses within this, right, it's okay because you're still in these trades that are going to cover your position. So for example, I'm right now in 4 Bitcoin longs. What that means is I've already made money on the short here, but if it gets stopped out, not only am I locked in profit, but my longs are pumping, making money. Let's say I had not hit a TP1 on the short. I'm in 4 Bitcoin longs. I take a short here. We don't even hit my TP1 and we pump, all right? And I take a loss. Because I'm already holding those long trades from lower, the loss is covered and then some by the profits being made on the longs. So it takes out even the sting of the loss because I could lose $1,500 on the short and be up $3,000, $4,000 on my longs. And I just take a little profit out the longs to cover the loss on my short. And I'm still making money. I haven't even taken a loss. It's like a risk-free trade. All right. So this is how I manage open trades. Now, I want to take a little bit of time to talk about leverage because leverage has some benefits. Obviously, you can trade with more money than you actually have, right? But it also will allow you to enter multiple positions on the same account without having to use as much money for your margin, right? So if I have $1,000 in my account and I would put $1,000 on my trade and I want to take 5 trades, each $1,000 position size, I'm going to need some leverage, okay? Now, a lot of people get leverage wrong. They don't understand what leverage is or how it should be used. Here's how leverage should be used, and then I'm going to play a clip going into more detail. Leverage does not matter as long as you are stopped out before you are liquidated. Leverage does not matter. Let me just say this a few times because I know it can be difficult for some people to grasp. Leverage does not matter as long as you're stopped out before liquidation. All right. If this is my long trade and my liquidation price is here and my stop loss is here, my leverage does not matter. Now, the higher leverage you use, the higher your liquidation price will be. So this is liquidation price. All right. The liquidation price. Boom. And this is our stop loss. The higher leverage you use, the closer to your entry the liquidation gets. All right, so 100x leverage, your liquidation's close. 1x leverage, your liquidation so far you can't even see it. As long as your liquidation level, does not come above your planned stop loss, the leverage does not matter. Because leverage is not a tool to take your $100 and 100x it. Leverage is a tool where you're using the same amount of dollars on your trade, regardless of leverage, so long as your liquidation is not above your stop. It doesn't matter. What do I mean by that? If I calculated based on this risk to reward that I'm putting $1,000 on a trade, all right, $1,000 on a trade, that means regardless of the fact if I'm using 1x leverage and I'm putting my full account on the trade, or I'm using 100x leverage and I have the potential to put that $10,000 on the trade if I wanted to, I'm sorry, that $100,000, if I have $1,000 in my account on 1x leverage, if I'm putting $1,000 on the trade on 1x leverage, or 100x leverage, even though I could put $100,000 on the trade, I'm not. I'm still only putting $1,000 on the trade. I'm still risking the same amount, so long as my liquidation is not above my stop loss. Now, if this doesn't make sense to you, I'm going to play a clip where I actually show you this in real time, so hopefully that can make more sense. Everybody is wrong about leverage trading. Now, if you are trading cryptocurrency, especially with leverage, you need to watch this video to the very end, because there's a very high chance that you don't understand exactly what leverage is used for and how to use it in the proper way. And I cannot tell you how many crypto YouTubers I have seen talk about leverage, and I can tell by the things they say that they don't actually trade with leverage. They're just being paid by the exchange to promote the exchange. No hate. This is a business. We're on YouTube. Exchanges are great platforms to trade crypto, but I can tell by the way they talk about it, they don't really understand how to use it and what it should be used for. Now, I recently did a live stream where I went over exactly how to use leverage and the different situations in where you would want to use leverage in order to trade properly according to good risk management. When leverage is used properly, it is a tool that can be used in accordance with good risk management to actually mitigate your risk. Now, a lot of people, when they think about leverage, they think about gambling. They say, if I have $1,000 in my account and I use 50x leverage, now I have $50,000 to trade with. And they essentially gamble away all their money by using high leverage and getting liquidated. However, you're about to see in the following clip how, regardless of whether I'm using 1x leverage, 50x leverage, or 100x leverage, if I am abiding by a simple formula that I give you in the video to calculate your position size, as well as abiding by good risk management using your stop loss, it is irrelevant whether or not you use 1x, 50x, or 100x. You are risking the same amount of money no matter what leverage you use. And I'm actually going to show you the proper way to use leverage and the proper situations or scenarios where you actually need to use leverage in order to get the most out of your trading. So make sure to like the video, make sure to subscribe to the channel, because we really are bringing you the juiciest crypto updates, all right? I let everybody know when I believed that the bottom was in for that last big pump up to $49,000, opened a $500,000 long trade publicly. I let everybody know where I was looking for that big short trade the day before the ETF, and of course, I put my money where my mouth is, taking the juicy short trade. You guys do not want to miss these updates, so make sure to subscribe. We're so close to 200,000 subscribers. Click the bell for notifications, like the video. Let's get into this. Leverage is irrelevant if you follow the 3 pillars that I just laid out, meaning you have you're waiting for your strategy trades to come to you and you're using good risk management. It doesn't matter what leverage you use, okay? It does not matter what leverage you use at all. I know that sounds crazy to people, but let me show you what I mean, all right? I could enter a long trade right now. Now, here's the thing. When we are using good risk management on a trade, right? What does that mean? It means we are risking 1%. 1% of our total capital, okay? If I have, let's say I have $1,000 in my account, that means for every trade I take, I should be risking 1%, $10. All right, so how do we calculate how much money to put on the trade? Well, if this is our idea, we only need a 0.15% stop loss. The way you calculate how much money to put on the trade is you do however much you want to risk, in this case is $10, and we're going to divide that by the percent of our stop loss. So if it's a 0.15% stop loss, right, we move that decimal point over 2 places, and so we dividing that by 0.0015, and that equals the amount of dollars that we put on the trade. That's our position size, right? So if we have $1,000 in our account and we're risking 1% with a 0.15% stop, you're going to do the calculation. You're going to do 10 divided by 0.0015. That means you could put $6,000 on the trade, and if your trade gets stopped out, you lose $10, okay? Now, look at this. I'm going to go ahead and do 1x leverage, and I'm going to put $6,000 on the trade. All right? I'm going to long it with a stop loss at 42.035. 42.035 is my stop loss. All right? If I get stopped out, I'm losing $11. That's about 10%. That's about 1%. Right? Boom. We're in the trade. Now, if I get stopped out of my 1x leverage trade, right? What happens? How much am I going to lose? Right? I'm going to lose $11. That's about 1%, a little bit more than 1%. Okay, let's close our trade. Now let's use 100x leverage. All right, not 100. Let's do 50x. Risky? Is it riskier? All right, let's enter our trade, $6,000, and our stop loss is the same stop loss. Okay. Now, if I get stopped out of this trade, 50x leverage, how much do I lose? $10. The same amount of money. I did a 1x leverage trade and a 50x, and the risk is the exact same. Okay? The only difference is how much margin is actually isolated onto my trade. This is the difference. This is how much you lose if you get liquidated. Now, if you are trading properly, you are not going to get liquidated because your stop loss always goes before your liquidation price. Always. So there's no risk of liquidation here because I already know that my idea is wrong if we come below this level. So there's no need for me to hold this bag lower than this level. Okay, now let's close the trade. Now let's do 100x leverage. All right, same trade, $6,000. All right, let's go ahead and long it. Now, if I get stopped out here, right, how much am I going to lose? $5? How is that possible? Oh, it's because the price went down. That's why. It's because the price went down. So yeah, okay, price went down from our original idea. But if price had stayed the same from our original long idea, we would have been risking $10, all right? You could see that regardless of 1x, 50x, or 100x, if you are abiding by the 3 pillars of trading, which is abiding by a strategy, using good risk management, and then having the patience and the discipline to stick to the risk management, leverage doesn't matter. It does not matter. But you can see here, I'm risking $11 every single time. The only difference is at 1x leverage, I'm putting up $6,000 as margin. So if the trade goes against me 100%, I lose 6K. At 50x leverage, I'm putting $120, which means if the trade goes against me 2%, I get liquidated and lose $100. At 100x leverage, I'm only putting $60 as margin, which means if the trade goes against me less than 1% and I get liquidated, I lose $60. Okay, that is the difference. But it's not necessarily more risky to use leverage unless you say to yourself, oh look, I have $60,000 in my trading account. Let me just use 100x leverage and put $2 million on the trade. That is where leverage is bad, all right? That's where it's riskier, okay? But it's not any riskier if you're actually doing it right. So what are some reasons you would want to use high leverage? Well, let's say you don't want to keep lots of capital on your exchange, which I recommend you don't do. Right? You should keep most of it in cold storage, which means if you're trading with a $250,000 account, but you only want to keep no more than 50K on your exchange in case the exchange has some kind of hanky-panky, then you have to use leverage, okay? What's another reason to use leverage? Another reason to use leverage is if psychologically you have trouble abiding by your stop loss, okay? In this instance where I have 100x leverage here, my liquidation price is 41.8 right down here. Okay, that's my liquidation price. What does that mean? That means if I start to play the stop loss game of saying, oh, I don't know, I think we're going to come back up, let me move my stop loss, you can only do that for so long, and then the maximum loss you can take is a 6% loss, which still sucks. But it's much better than holding a 1x leverage trade and playing this game and turning what should be a scalp trade into a freaking long-term hodl investment. All right? So there's different reasons to use leverage. It's a tool. What's another reason to use leverage? Let's say you want to trade Bitcoin, Ethereum, and Litecoin and Chainlink, and you only have $1,000 in your account, right? Now, if you only have $1,000 in your account and you want to trade multiple coins and you're using this formula to calculate your position size, you might need like 30K of capital to actually trade all those coins while still only risking 1% per trade. Because if you're scalping and you only need a 0.15% stop loss and you're putting 6K on the trade, and you're trading 5 pairs, you're going to need 30K. And all of those trades are potentially going to lose $10 per trade or potentially make $60 per trade if you're using a nice risk to reward ratio. But you don't have the money to do that unless you use like 10x leverage, right? It's not any riskier if you're doing it right. All right, also, I hope you found that session helpful. Make sure to like, subscribe. May God bless everybody in Jesus' name. And in the next session, we're going to be going over more psychology and mindset that will help you become a more successful trader, because when it comes to trading, like I said in the beginning, the knowing is easy. The doing is hard. And so we need to set up systems and processes that will mitigate the temptation to let emotions take over our decisions. So with that being said, I'll see you guys in the next session. Peace.